Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Derek Webb from Biorem. Biorem trades on the TSX Venture Exchange under the symbol BRM and on the OTC under BIRMF. The company is currently trading at 89 cents with roughly 15.4 million shares outstanding, or about a $13.5 or $13.8 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Before we just went on air here, we talked to Derek, and we promised him we'd keep it a little bit more casual than usual. So that's what we're going to do. We're not going to have a presentation. We're just going to jump into a bit of a Q&A session. So Derek, thanks for joining us today. Great to get a chance to get an update. As Trevor was saying, we've sort of done our yearly screening of all the companies, and your company ranked very highly this year, as it's done in the past. But this year, you guys have obviously done some good things in the past 12 months. So wanted to catch up with you and sort of get an update and ask you questions. But before we do that, why don't you just refresh everybody's memory and tell everybody what Biorem is all about?
Great. Well, thank you, gentlemen. And it's a pleasure to be back in front of you guys and sharing the Biorem story, which I think is quite exciting and continues to be quite exciting. And just as a refresher, Biorem, short for bioremediation. So essentially, I consider ourselves an environmental biotechnology company where we apply naturally occurring microorganisms to deal with gaseous phase emissions. So fancy name for we use bugs to eat air pollution. We're transitioning, as some of your subscribers will know, and as you guys know, we're transitioning a little bit from being a specialist with biotechnology to being technology agnostic and providing a full suite of technologies and services to meet the full broad range of applications that are out there.
Fantastic. Okay, so I'd almost say you're a rare sort of clean tech company, certainly as of the last couple of years. A lot of sort of companies have listed, but they've yet to really generate substantial revenues and earnings. You're a profitable clean tech. That's kind of what I'm getting at. You guys are making money. You have for a while now. You had quite a substantial jump in revenues this last quarter. How are you guys able to do it? What's happened this last quarter, this last year, and what sort of does the outlook look like for your business?
Okay, great. I think what's happened, put simply, is really diversification of our products and services. If we look at North America in the air pollution control space, you can select the technology in several buckets, whether it's physical technologies, chemical technologies, or biological. And, for all intents and purposes, it's a third. So what we decided over the last couple of years was, well, we need to start operating in these other buckets. And there was a big push in 21 and 22 to develop a full suite of products to go after the physical side of the market opportunity on the continent. And I think that's one of the real great highlights this year in terms of a lot of the company records that we broke. So, some of those, as we said in our Q3 financial release, well over $44 million in revenue, in backlog, which is a key development for us. On average, we've been a 20 to 25 million revenue company a year. So to have a backlog of over 40 million is quite significant. And there's a couple, you need to, devil's always in the details. So you got to understand what the numbers really mean. So historically, I would have said, the backlog, which means an order in hand, and we have a 99.5% retention. So when I say we've got backlog, it's not something that I hope we have that, a customer can cancel. But once we get a signed contract, we hold on to them. And so that 44.5 million is secure. Now, typically I say that revenues in the next 12 or so months, but this year with this backlog, it's actually spread out over a few years, which is good for a couple of reasons. So as of December 31st, I'd say about 20 million of that backlog was for the 23 year fiscal period. So we already have a nice backlog for 24 and for 25. Why that's good? Well, it gives us as a management team, it gives us visibility for the future, right? So I've already got a little bit of a foundation for the future, which is really nice. So let's dig into those numbers even a little bit more. What's especially exciting about this large backlog is we were able to close just under $9 million in these new products. Now, these new products have only been introduced to Canada and about 2 US states. So this has been a very targeted introduction to the market, and we still have a lot more geographical territory to cover. So we're excited from that viewpoint as well. As you recall from earlier discussions, we also talked, it wasn't only about bringing on a new product line, dealing with the physical technologies, but it was, well, how do we deal with one of the big challenges everyone in the clean tech space has? So that, capital equipment business is very lumpy, lots of peaks and valleys. So what we're also trying to do is say, hey, we've got an install base of over 2,000 installations in North America, and they tend to be regional. So if I look in Florida, we've got literally hundreds of installations within a 60-mile radius. If I look at Toronto, same thing, right? Hundreds of installations. So the idea is, how do we capitalize on this resource? Much easier to sell to an existing client. And are there aftermarket services that we can provide that with some time and effort, can we turn that into a bit of a, I'll use the term recurring revenue. So if we can build out our service revenues, we're building out that baseline once again. So what's exciting about Biorem right now is balance sheet looks great. We've got the strong backlog that is spread out over multiple fiscal periods. We've got new products that are being very well accepted. I mean, out of that to almost 9 million in sales, there's a $5.5 million order for these new products for a county just outside of Toronto. So it's demonstrating that the market is receiving this technology well. The projects can be large. But the other key thing that we're banking on for the future is that all of these physical systems that we sell, think of them as a sponge. They can only hold so much contaminant. At some point, you have to throw it out, replace it with a new sponge. So this is a very different model from our biological, where we put the equipment in, we forget about it for 20 years, we get a call 20 years later, hey, can you help us upgrade? Well, the whole thing with the physical side of the market is we hope to get this repeat business of the consumables. So what I'm trying to really kind of demonstrate here is, we've got this great backlog of current projects. We're expanding in the service, but we're also hoping to expand on the consumable side so that with all of these initiatives coming in, we really start to get rid of that peak and valley that plagues clean tech companies, and something that plagued Biorem for decades. But as your introduction showed, it's something that Doug and I, our CFO, we've really focused on the initiatives that really try to get rid of that capital equipment lumpiness. And we're quite proud with the achievements of the organization. It's still lumpy quarter to quarter. We're always the last piece of equipment that goes to site. So there's a lot of things outside our control. But I got to say, one of the things the organization did really well with over the last couple of years is dealing with the supply chain disruptions, dealing with the inflationary pressures, and ensuring that those two risk factors never impacted our ability to deliver on time or on budget. And I think that's reflected in our financial statements, and it's reflected in us meeting we've never been the cause for a project being delayed. And I think that's important, builds that credibility, that reliability. When you're building an infrastructure project, you know, the equipment, the facility needs to be built. It can't be delayed. And we don't want to be that weak link. So we've all of these initiatives play into that.
Yeah, let's talk a bit about the sort of the challenges that so many of these businesses are facing right now, logistics and supply chain and inflation. What are you guys doing to help mitigate that? I would imagine a lot of your material is probably coming from offshore, or correct me if I'm wrong, but how do you mitigate some of the issues so many companies are dealing with?
So we've done a number of things, and a few of them are quite confidential. Certainly, I don't want our competition utilizing the same tricks, but we've got a whole war chest. You know, these budgets for these projects, which is really the difference between a Biorem and a typical clean tech company, and I'll get into that differentiation in a second. But what we have is a very diverse supply chain. And yes, we were heavily invested in China, but China has not been a reliable partner for years. I mean, pre-COVID, there was problems. You know, if I look at 2018 and 2019, we were only able to manufacture and produce 3 months of the year. Now, that was enough to meet our objectives, but it put a lot of stress. And, you know, I had hair before those days began. So I guess, you know, I'm joking, trying to make light of the situation, but China's never been a reliable supply chain partner. So we always had to build in backup, whether it's Mexico, the US, Canada, Europe. We've got a very diverse supply chain that allows us to switch from one area to the another, depending on freight and logistical costs, depending on the ability of that facility to meet the schedule that we've committed to. And then also, because we deal heavily in infrastructure projects, these are projects that historically never had price escalation clauses. It's unheard of in the segment that we work in. And these budgets get set years ago. So when I have a contract, my backlog of 44.5 million, it's set. I cannot raise the price. And when you see shipping, you know, China, the average container cost used to be $5,000 to get it to US. You know, at the height last year, it went up to $32,000 a container. Well, if my job has 100 containers and they're costed at $5,000, I've got no choice. I cannot manufacture and ship out of China. It doesn't make any sense. So this diverse supply chain helped, but we've got a number of engineering tools that we can apply as well. So it's not only the logistical equation and having a diverse supply chain, but it's substitutions, it's alternatives that meet or exceed the current quality. And that engineering, that value engineering component of what we do is very closely tied to logistics and supply chain. And we've just been able to balance the two and juggle that with project schedules to actually keep our costs down. And if you look at our financial statements, you'll see that whereas most people have seen inflationary pressures of, you know, on average 10% in industrial side, you'll see that we've actually kept our cost variances to below 1% to 2%. So it's been a very rigorous approach, and it's something that we deal with on a daily basis. And it's been like this for 2 years. Not an easy thing, but it's, you know, I'm knocking on wood, but it's been a strategy that so far has paid off for us.
And are there other challenges you're facing? I mean, labor, I mean, we hear so many different things, but sort of what kind of keeps you up at night right now outside of what we just spoke about?
It's always sales. It's the unknowns. I mean, we know we have currency risk. We know we have inflationary pressures. We know there's geopolitical risk. We're entering in, as I'm sure you guys are well aware, it's just a heightened period of uncertainty. So, you know, but we try to hedge for each of those things that we know. What keeps me up at night is the unknowns, right? What could happen? Could we see large infrastructure projects eventually get canceled? You know, I think that's one of our strengths and typically not a weakness, and never kept me up at night until now. So the very big difference, you know, investing in a clean tech company can be risky, right? How is that widget going to be adopted? If you're dealing with climate change, the widget that you design and try to sell today, is it going to be the solution? So clean tech companies inherently have had a lot of risk because no one does anything voluntarily for the environment. It has to be regulated and enforced. Where we're different is that we are actually an infrastructure company. Yes, we have a clean tech product, but on average, 80% of our sales is on infrastructure projects. Now, what's important about that is it's stable. For the most part, historically, that has been a stable investment. If you look back to all of the financial downturns in the last 20 years, the response has always been putting money into infrastructure. Okay. Budgets for infrastructure usually get set 5 to 10 years before the project go ahead. Not 10 years on the long side, but certainly the planning begins 10 years. So even if there's a downturn in the economy, unless it's a 3, 4, 5 year sustained downturn in the economy, those infrastructure projects do not get canceled and money continues to go into them. So we've seen that as being a very reliable source of revenue for the company. So we're clean tech, yes, but because so much of our revenue comes from infrastructure, I think our risk profile becomes very, very different. Now, the reason why I say I'm a little more concerned these days is these are very uncertain times. A lot of municipal tax bases are drying up depending on the regions, but ultimately people need water. People need to get rid of their wastewater. People need a good place to send their solid waste to. And all of these things, those are key market segments for our technologies. So I feel relatively confident in that. But it's just heightened uncertainty. You never know what's going to happen in the future.
Now, earlier you talked about some of the sort of the consumables or the areas you want to get into. Give us a sense right now of kind of what you have available, and then kind of my next question is, does this lead to the potential for M&A? Is there other products or services that you'd like to bolt on?
Well, absolutely. We focused a lot of the discussion and update on just those organic growth initiatives, right? So the consumables was good. The whole physical product line was good because we could use our existing internal and external structures to move that product to the market. So very little cost, right? We didn't need different engineers. We didn't need a new sales force. We didn't need distributors. And the customers were all the same, whether the consultant end users or the regulators or the contractors that are building these systems. So that was really nice and simple. The other element to the growth, and it's a recognition of trying to create value for our shareholders in an accelerated time frame. Because I think what's lost on the investment community and a lot of people, and certainly I didn't have an appreciation for this, is that the clean tech sector takes a lot. The adoption curve is a slow one. And I'll use a Canadian analogy. This isn't a hockey stick for growth. And that time horizon often is too long for a lot of shareholders and a lot of investors. So the only way we're going to get significant growth and value creation in a compressed timeline is to have a fairly aggressive M&A strategy. Now, having said that, I use the term aggressive because I think it's important to show the amount of effort that needs to go into that initiative. But the recognition is and Doug and our management team, we're still quite conservative. And we don't want to just do an acquisition or a merger for financial engineering's sake. What we're trying to do is create long-term sustainable value. So we have some very strict criteria. Any deal needs to be accretive for our shareholders right out of the gate. The rude awakening for me and my team is that those companies don't seem to be as abundant, let's use the term, as we expected. So I'll be a little light here, but I expected to go out I'd find a company like Biorem, 20 million in revenue, a couple million in profits. We would like the management team, we would get together, we'd do the deal, we'd double in size overnight, and we'd all be retired on the beach sipping margaritas. Well, that was a rude awakening to find out that will not happen. We've looked at over 200 companies, and there's some interesting companies out there, but they most often just don't meet our conservative criteria. We don't need to do a deal for a deal's sake. So what we're looking for is something really accretive that we add value to, and that candidate adds value to this. Not to say it won't happen. We've got a number of candidates that are quite advanced in discussions. But these things take a lot longer than you expect, and we want to make these deals work. I was looking for technology and for geographical representation as being priorities of this initiative. But there's certainly a lot of exciting things we can do with vertical integration, and it gives that supply chain resiliency. And as long as it's an accretive deal where we still add value and reciprocally, then I think it's worth exploring. And so we've reopened those types of investigations as well. So really exciting things from the M&A side as well, because we've just got this convergence of things, right? Highest bookings, highest backlogs, new products, strong balance sheet. Our sales funnel, which we haven't even talked about yet, is at historical highs. So not that they're committed or that we've got an order in place, but just the size of the sales funnel and our bidding activity is high. We still have, as of December 31st, we still had about $60 million in outstanding tenders. So we've bid public projects that have not yet been awarded. And our win rate for the last 12 years averages between 38 and 46%, give or take which sector you're looking at. So it's conceivable out of that 60 million that in the next 12 months, almost half of that will be closed by our team, unless something crazy happens. So we're taking data from 12 years. So we have this convergence of all these positive factors, and it's just a matter now of trying to get that home run with one of these initiatives to really speed up that value creation.
Now, Derek, fingers crossed, assume you're successful in getting the bulk of those tenders. Do you have the capacity or the resources to be able to execute on that over the next couple of years?
That's a great question. Yes. I mean, the simple answer is yes. We're a very lean organization. Certainly, if you pour into our financials, a lot of people say we're too lean, but we still have the capacity. We've built up these management processes. We've built up the management structure and just the whole human resources structure of our company to be able to handle a large volume of business. But we have also built it in a way that we can add capacity at the right level to undertake projects if they come in. We were joking early before we started this session, about the importance of being able to do a wide number of things, and whether it's organic or inorganic growth strategies. We have the manpower to be able to do those. Where it's going to become an issue is if we want to undertake other types of new initiatives. So if it's just about bringing in these sales, that's what I was trying to get at. We talked about the importance of sales. You always got to sell first, right? And building out the capacity to deliver on those sales is the easier part. It's more about finding the sales, bringing the sales in, cultivating those customers. Delivering the project is something that we've never had an issue with, and I can easily staff up at the appropriate time if required. We currently have the human resources to handle what we have and what we're predicted to get. It's more of whether we want to invest in future growth by hiring now. And once again, we tend to be fiscally conservative. So I focus more on the front end. Let's get the sales in, and then we'll deal with it. Otherwise, the adoption's just so long here. I brought this up a couple times, but any new initiative that we try to undertake, it's going to be 3 to 5 years to really bring back the results to the company. And that's a massive investment in time and money. So it's really about picking those low-hanging fruits, get the sales in, and then everything else follows.
That makes sense. It does sound like everything's sort of lining up for you guys. In the event that you don't have M&A opportunities that you want to execute on, what happens? I'm sort of looking out, say, 2 to 3 years. The cash you generate, or the profits you generate, what do you do with that? Do you reinvest to expand more? Do you give back money to shareholders in some form or fashion? What do you do with excess cash when you have it?
Yeah, so I think at this point, the short to medium term, it's about cleaning up our balance sheet a little bit more. As you remember, we did a share repurchase in December of 21, which kind of removed a 60% block of our outstanding shares there. So still have a little bit of debt to repay on that, and certainly we want to clean that up. Certainly having a large pool of capital is good for funding larger, bigger, and better projects. And then it opens up the opportunities for the future. Yeah, everything's on the table at this point. We've talked about dividends, the pros and cons, whether we want to go down that route, which would be unusual for a company of this size. But it's still, to be diligent as managers, we have to explore every option. But I do look back, personally, I think there's probably a better use of capital. And ultimately, having a small dividend for our patient investors or loyal investors would be nice, but I think doubling the share value would be even nicer. So I think it's really about how do we deploy that capital? It has to be through an M&A. At this point, to get anything done in an appreciable time frame, it's going to be the right accretive deal, and we're not going to give up till we find it. Is it going to happen in Q1? No. Will it happen in 23? It's quite possible. And if it doesn't and it happens in 24, it happens in 24. But I think that is probably going to be the most efficient use of capital. Having said that, on an almost monthly basis, I'm exploring everything. We talk regularly with our investors and a lot smarter guys than I, and trying to figure out other ways of using our capital, other ideas of what this organization could look like in the future. But in the meantime, it's 80% of my time focused on growing the company, 20% on the M&A and getting those, having a right team in place to make sure that our net is wide, that we can properly evaluate the candidates. And, we just got to be patient. Something's going to happen. It's just about being diligent and patient.
Derek, is there anything sort of within the industry? I'm kind of looking for an industry outlook here, but is there anything within the industry that's changing or changed? Is there, some government initiatives or anything that sort of could either benefit the business or change the business in the sort of near future?
Well, I think it's always about the regulations, as I was implying earlier. And, the good news is there's increased education around the quality of life and of health issues and how air pollution contributes to both of those. There's also, the buzzwords around climate change, which are also very important. So we are continuing to see a push in the right direction. Certainly under the previous American administration, there was kind of a divergence slightly, but that was only at the federal level. And when you got into various states, whether the feds were doing it or not, the states were still interested in ensuring the quality of life for their communities. So it's interesting. And another example is in Canada, where with the legalization of cannabis, the emissions, air emissions associated with it were mandated through Health Canada with a single line in the Cannabis Act and with no teeth to enforce it. So nothing was done there, but a problem at the municipal level developed. So what happened was, since the province wasn't dealing with it and the feds weren't dealing with it, the individual municipality said, we have to do something about it. Mm-hmm. So even in the absence of federal regulations, you still have an educated population demanding that their quality of life be taken into consideration. Now, the other exciting driver for the future is what's actually happening in Europe right now. So our friend Putin and his little vacation in the Ukraine is going to have far-reaching long-term implications for not only Europe, but I think most of the world. And so if I go back to the oil shock, the gas shocks of the 70s, and you look at the implication it had on fuel efficiency and so many other things, materials of construction that we enjoy today, was largely due to those issues in the 70s. Mm-hmm. So when you look at Europe's dependence on Russian gas, there is now a driver for replacement of that gas. Mm-hmm. And if you look at what the European Biogas Association is doing, so they're looking at renewable energy, and they've set a goal, a target, I forgot what it is, 65 billion cubic meters of renewable natural gas by 2030, which is an unbelievably difficult target to achieve. But that's what they're trying to work with all of the European governments to try to reduce all of the bureaucracy with trying to get one of these facilities off the ground. That 65 billion cubic meters represents only 20% of Germany's Russian gas imports. So the Europeans already have the waste to convert to that natural gas. They just need to build the infrastructure to deal with that. And that's a segment we do very well in, both dealing with the emissions from the facility itself, but also with helping take out some of the contaminants out of that biogas that is produced as they try to upgrade that to more valuable products. So you have this quality of life dynamic that you see in many, many sectors and jurisdictions, but now you also have this one very big driver that's going to create this huge industry. And it's certainly, you're seeing the interest in Europe for this, but it has it's a global market for gas, and we are seeing an uptick in interest. And in fact, we're seeing a lot of European companies looking at developing projects in North America. So some very exciting times from that side, from a driver standpoint.
Mm-hmm. Very interesting. Let's switch tacks a little bit here. Capital markets. I mean, you're a nano cap. You're operating in the clean tech space, which has kind of come and gone out of favor and in favor from investors. But you're one of the fundamentally strong companies that we've seen. You've held up well as a stock, but are you seeing? I mean, are you getting more phone calls from investors? Are you seeing different attitude towards you guys? What can you tell us about sort of the investor sentiment that you're seeing out there right now?
Well, we've certainly seen it pull away from clean tech in the last 12 to 16 months, call it. So there seems to be less free-flowing capital. Had we gone back a couple of years ago, there's so much money on the clean tech space. There wasn't any place to park it, which is still the case. I still see that as there still is money out there, but where do you put that money in the clean tech space? And, prior to recording, we were talking about some companies that unfortunately imploded over the last year, that there's not a lot of good companies to look at. So we are seeing that. We are seeing more hesitation in investing in clean tech, given just the broader market shape. But I also see there's money to be put into the right company for the right reason. So I think that, this ties back into the M&A, because, part of our issue and part of our goal is we only have the 15 million outstanding shares right now. So we're not very liquid, and a good proportion, a good 11, 12 million out of that 15 million is closely held between managers, friends, long-term investors. So we just don't have that liquidity. So as we look at M&A activity, we're really looking at issuing more shares to fund that, not only for raising the capital to do the deal rather than through debt, but actually to try to improve the liquidity. There's no sense in building a great company and having very loyal investors, but when they need to get out, they need to get out. And I want them to be able to move a large block of shares at the right price without dropping our share value. So our growth strategy takes the capital markets into account. And it's something that we're out there speaking to a lot of shareholders, a lot of investors, to make sure that the message is out there, to keep us on their radars. Because when we do get the right deal set up, I want to make sure that capital is available to do it.
So that sort of brought me to two other questions. One is, do you know of anybody that is, maybe a block of stock for sale? Is there anybody that's actively out there interested in selling a block? And the second part is, you kind of alluded to it, is it sounds like a higher share price does positively affect your business, especially if part of your business now is M&A. So, does that mean, if your share price were to significantly increase, does that increase your sort of the pressure to go out and do a deal?
No, that's an excellent question. But, once again, we talk about this convergence of factors. But our current shareholder base is diverse, and it's been quite loyal to the management team and supportive of a conservative growth strategy. There's no sense in taking risk that can further reduce the value of the shares. So we're lucky that we don't have any single large blocks. With that 60% block before, we had a special interest group, this Chinese state-owned enterprise, that had very clear objectives that were different than, let's say, what would be the objectives of the rest of the minority shareholders. So we don't have a block of a special interest group applying pressure to do certain things. And in fact, what we have is a diverse shareholder base that wants us to do the right thing. They believe in the vision that management has put forward, which is about creating this world-class global institution that's going to stand the test of time, full service provider. But they don't want us to take undue risk to achieve that. So I think we're very lucky from that regard. So we're not seeing that pressure to do a deal for a deal's sake. As you and I both know, the vast majority of deals fail. And especially in the clean tech side. If you look at any of the companies that have tried to put a bunch of environmental companies together, there's none left standing. There's very few. The only ones that have succeeded, other than Suez and Veolia, but these guys are, those are different beasts. There's very few companies that have made this happen, especially not on the capital side or capital equipment side. So I'm cognizant of that. And that's why culture, you never buy a widget, you're buying the people, you're getting the team. And we need to make sure that the team fits culturally with our team, and that they actually have the good people rather than just a smart little widget. So all of those things were taken in consideration as we move forward.
Great. Derek, is there anything I haven't asked that I should have asked today?
No, I think we've done a good job of kind of covering everything. I once again, this is my conservative nature. I always caution everyone, these are forward-looking statements, but I just look at the facts, right? We've got good numbers. We've got a good track record. Everything looks positive. Doesn't mean it's going to be, but I'm very optimistic on the future. We've covered all of the initiatives we've got underway. I think it's important to realize that, it's the credibility of the initiatives and the management team you're looking at. Did you put a good vision together for the company? Do you have the appropriate initiatives? Did you execute on those initiatives? And did they return the results that you were hoping? And it's something that we're continually gauging, reviewing, holding ourselves accountable to. And I'm hoping to build that credibility year over year to show that, we tend to under promise and over deliver rather than the reverse. I think there's just too much out there. There's enough risk in investing as it is. And it's probably my engineering side. Here's the facts. This is what we've done. This is what we're going to do, and hold us accountable for doing those things. So I think we've covered all of those elements, and I'm excited to see what 23 brings. We've got some exciting things. We've got a phenomenal team. I can't say enough about the team we have all the way through at every single level in the company. The average tenure rate is over 10 years now. And minimizing that turnover has been a key to our success. So it's all about the people, guys. And we've got one hell of a team to help us build out as we move forward.
That's fantastic. Well, this has been great. As always, it's fun to catch up, and congratulations on what so far has been a great year last year. But looks like you're leaning into 2023 the right way. So great to be able to catch up and catch all that. Is there any sort of parting message? I mean, I think you covered most of it here. Is there anything else you want to say to everybody before we leave and wrap it up?
Not really, other than just keep an eye on us. I appreciate everyone's loyalty. We are always available to answer questions, to talk. We're pretty approachable. Like I said, there's a lot smarter guys out there than me, and fostering that discussion in the community, whether it's for Biorem or just the broader clean tech community or small cap community. It's something I'm very passionate about, and I'm always approachable. So once again, I thank everyone for following me. I thank you guys for the support, and I'm always here to help out in any way I can.
That's awesome. Well, we've been speaking with CEO Derek Webb, CEO of Biorem Incorporated. The symbol again was BRM on the Venture Exchange. Derek, thanks for joining us, and looking forward to catching up soon.
My pleasure. Take care, all.